We were able to help her save over $50,000 in taxes. And that will just give her more ways to actually have more deductions because now she's in the business of real estate. With the write-offs and depreciation, that could give her another $75,000 plus in tax benefits. We're able to then put a framework, a path in order for her to get to the promised land, as we call it. In today's session, I'm going to actually show you how I had an advisory session with a client recently. Let's just go over it. So my client, she is based in New York, and she is an Instagram promoter, right? She's got a following of about 2 million people, right? And she does brand deals. In terms of income, her income last year was roughly $450,000, okay? Now this year, her income is going to climb to roughly $600,000 to $650,000 a year. So it's gonna go up quite a bit, okay? She is a mom with 4 kids, 4 plus 1 on the way. And she homeschools the kids. Okay? Look at the level of income that she is. She stays at home and she homeschools the kids. What does that show you? It shows you that this is a woman who actually knows what she's doing. She's in fully control of her house and in full control of her income. Now, what's the problem, you might be asking? Well, when I asked her, she said, well, Victor, I have been doing the taxes myself for the last couple of years. And I've been paying over $100,000 in taxes for the last few years because I'm using one of the softwares out there. We call those cheap platforms. And she is tired of overpaying taxes. So that's how we started the conversation, right? She explained to me, well, this is my income. This is my household. And I'm tired of overpaying taxes. Okay? And I was like, okay, I understand that. Tell me more. Tell me what are some of the goals that you have. And the reason I ask her what are some of the goals that you have is because when I have an advisory session with the clients, I want to understand what is it that they want to do in the future, right? So I'm understanding her level of income, her household, and how much taxes she's paid in the past. But I'm not able to do much with that information without me knowing actually what is it that she wants to do in the future, right? Because business is a journey, it's a life journey. So I want to understand what is her life journey so then I can help her get there. Okay, so her goals are she wants to buy $1 million property, right, for a rental real estate. And this is possible because she has the income. She just doesn't know how to do it. Great, perfect. I said, okay, I understand that. I also asked her, what else would you like to do? She wants to publish a book. And I asked her, why do you want to publish a book? And she says, well, the reason I want to publish a book is because I have 2 million followers. And they are thirsty for information, thirsty of knowledge. And she believes that in addition to the brand deals that she does, is that her audience can benefit from actually having a book with the remedies and suggestions that she can share with her audience, in this case through a book. Okay, I said, okay, so you want to buy real estate, you want to buy a book, you want to publish a book, and then what else would you like to do, right? What else is important for you? I want to live part-time in a villa in Italy, right? Which I found highly, highly interesting. Okay, so villa in Italy. Okay, so then I understood her goals. She wants to buy real estate because she wants to diversify her assets. She wants to publish a book, right? Because she wants to satisfy her audience. And then for herself, she wants to spend time in Italy, not only for her, but also for her kids and her husband, right? The whole family. But see that three of the things that she wants to do in the future are business oriented, right? So then my goal is, okay, how do we get to this promised land? But also she wants to reduce the taxes. So then my goal is, okay, I have to help you get to the promised land and also have to help you lower the taxes. So the idea is, how do we get there? But then I asked her a few more follow-up questions. I said, okay, so tell me more about how liquid you are. Tell me more about your assets, right? And she shared with me that she's got cash, right? About 110,000 plus. And then she's got an investment account with also over 100,000. Okay, so I want to point something out to you guys. Look at the level of income that this business person is, right? And then understand her level of liquidity, how much cash she has and how much investment she has, right? And also understand her household. This is a woman that actually is making money, high level of income, and then she's able to actually save money by piling the retained earnings of the business, right, into a cash account and investment account. Now, the goal is for her not to use this money too much for her to pay taxes or overpay taxes. And of course, we want to get her to the promised land. So then the question is, how do we do that? Perfect, let's go there. So some of the suggestions that we provided to her was, okay, so right now, your business is being taxed as a Schedule C sole proprietor. So you want to make sure that you get rid of that and you convert your LLC to an S Corp. And you have to assign yourself a salary. Okay? That was the first step that we took in order for her to actually start saving money. Remember, this is a promised land. We want to get to the promised land. And then the next thing she's going to be doing is that we suggested was, okay, so you have 4 kids and you are on Instagram. Why don't you then have the corporation, the S Corp, actually hire 4 kids and in the future, 5 kids, and then have the business pay about roughly 10K to each one of them. That's 40K in salary expenses that the kids are not going to be taxed on. And this is going to become an expense for the business. So this is expense for the business, and this is non-taxable. Right? And then, of course, we have the 280A, which is then she's going to rent her house to the S Corp at a fee, right? For 14 days. You guys know the 280A rules. We've talked about that in the past, right? So we're talking about the converting the Schedule C to an S, hire the kids, and 280A. Then we talk about SEP, right? That's going to give her even more savings and defer the taxes into the future. So with this savings, with this structure, we were able to help her save over $50,000 in taxes. Okay? Now, this $50,000 in taxes that she's saving will function as a down payment or contribute to the down payment to the property that she wants to buy. Right? Remember that she's got some cash, she's got some investments, and she's got some cash flows from the business. So her business is recurring, it's got recurring income. And she's got liquidity that she can leverage to buy the real estate. And then she's got the savings on taxes. But here's the follow-up, right? This is how money begets money. Once she buys the real estate, she's going to qualify what we call the trifecta. And we have spoken about this in the past, right? So we have cash flows, we have appreciation, and then of course we have write-offs, including depreciation. Now, the beauty about depreciation is a non-cash expense, and there we advise her to actually do a cost-seg study, right? That depending on the value or the purchase price or the cost basis of the property, you can depreciate the property in different levels of useful life. That could, with the write-offs and depreciation, that could give her another $75,000 plus in tax benefits, right? So then with these tax benefits, then she's got the liquidity, the money, for her to get to that villa, the promised land in Italy, right? So she's utilizing her business, she's implementing a tax plan that we're suggesting to her, and then with the savings, she's able to then get to real estate, which is getting more assets that is giving her the trifecta: cash flows, money coming in, right? So the rent pays the mortgage and the expenses. There's going to be appreciation because then the mortgage is going to be coming down, little by little. And then she's going to be able to have write-offs. Because then, of course, as she runs this business, she can become a real estate professional. And that will just give her more ways for actually have more deductions, because now she's in the business of real estate. Management fees, utilities, driving to the property, managing the property, repairs, and so forth. There's a whole list of items that she can qualify for once she's a real estate professional and is in the business of real estate, in addition to her main business. Remember that this business right here is funding everything for her. And then she's buying more assets that then are going to give her more appreciation and more wealth into the future. And then, of course, we had a conversation about, okay, so then with the book, let's talk about that. Likely she will have another LLC that will be having royalty income. Royalty income is exempt from FICA, which is Social Security and Medicaid. She's exempt from it. And then, of course, she's going to have levels of exemptions and write-offs against that book that she's going to publish, right? She's going to have royalty income, which is exempt from FICA, right? And then she's going to have even more expenses that are not associated to her real estate or her main business. And then that will lower her taxation, okay? So as you guys see, understanding where my client is, understanding her household, understanding how her taxation was in the past, understanding the business, the levels of income in the past and also in the future, and how much taxes she's paid and her level of assets, and understanding where is it that she wants to go, we're able to then put a picture, put a framework, a path in order for her to get to the promised land, as we call it. This has been a whiteboard session, and I wanted to share with you guys how we had an advisory session with a client that happens to be an influencer on Instagram. We love doing advisory sessions with our clients because this is actually how we do deeper dives, and we go into the goals, into the future, and then with our expertise and knowledge, we put a plan in order for us to help you to get there. Again, my name is Victor Delerme. It's a pleasure to present this whiteboard session to you guys. If you guys would like to have an advisory session or a consultation with us, please click the link below, and we'll see you on the next one.